So, let's talk about ExxonMobil. Right now, its stock is basically a tale of two completely different companies. You've got one story about quiet, steady financial strength, and another about a geopolitical earthquake that just changed everything. Let's dig in.
And that really gets us to the heart of the matter, doesn't it? When you look at ExxonMobil today, are you looking at a fundamentally solid investment, or are you, maybe without realizing it, making a huge bet on a pretty wild global event?
And this slide lays it out perfectly. On one side, you have the fundamental case, the boring but good stuff. Strong cash flow, steady growth, and analysts thinking it's worth about $132 a share. And on the other side, a massive shockwave out of Venezuela that sparked a $100 billion rally, but, and this is a big but, also threw a ton of new risk into the mix.
Okay, so to really get a grip on this, we have to rewind the clock just a little. We need to look at the story everyone was telling before all this drama started. This is the story of Exxon as a quietly undervalued giant.
Before all this geopolitical news hit, this was the number that mattered. Analysts were looking at the company and saying, yeah, based on its performance, this stock should be trading around $132. That suggested there was some real room to grow, just based on the fundamentals.
Now, this is the really important part. That $132 figure wasn't some wild guess that depended on oil prices shooting to the moon. No, it was built on something much more solid. It was about how the company was running itself. Its massive projects in places like Guyana, its focus on efficiency, and being smart with its money. That's what analysts meant by operational excellence.
So the bottom line was this. Exxon was already on a good path. It had cash you could count on, it was growing, not explosively, but steadily, and the stock was already up over 7% in the last 3 months. It just looked like a really sound, reliable company.
But that whole quiet, steady, reliable story, it was about to get completely blown up by an event thousands of miles away. Get ready for the Venezuela shockwave.
And just like that, bam! All that careful analysis of cash flows and modest growth kind of got pushed to the side by a massive geopolitical event that changed the entire conversation, literally overnight. And what was that event? The White House confirmed that Venezuelan President Nicolás Maduro was out, captured and removed from power. Now that's huge political news on its own, but for the oil industry, this was an absolute earthquake.
And you can see the market's reaction right here. It was just immediate and explosive. I mean, look at this. Chevron, Valero, both up 11% in a single day. ConocoPhillips and Marathon up 10%. Even a behemoth like Exxon jumped 7%. The whole sector just caught fire.
And to put that into perspective, we're talking about more than $100 billion in value being added to U.S. oil stocks in just a few hours. That isn't a ripple. It's a financial tidal wave, all set off by that one piece of news.
So why? Why such a massive, insane reaction? Well, it's because this news suddenly unlocked the possibility of a colossal prize. But it's a prize that comes with a mind-boggling price tag. This is what we're calling the billion-dollar gamble.
This is the prize. This is why everyone got so excited. Venezuela is sitting on 303 billion barrels of proven oil reserves. That's the largest in the world, even rivaling Saudi Arabia. For years, this incredible treasure chest has been totally locked up by political chaos. Now, suddenly, the door might be creaking open.
But getting to that prize is where it gets tricky. On the one hand, yes, you've got the world's biggest reserves, a type of crude that's perfect for U.S. refineries, and it's a shorter trip. But on the other hand, it's going to cost an estimated $110 billion just to fix the country's broken oil infrastructure. The political situation is still incredibly unstable. And here's the kicker. Companies have to put up all that money first.
And if that wasn't complicated enough, there's history here. A lot of bad history. Exxon and ConocoPhillips didn't just leave Venezuela, their assets were taken. They are still fighting in court to get billions back. $1.65 billion for Exxon and a crazy $12 billion for ConocoPhillips. And the new deal? They have to pour in billions in new money before they even get a chance to recover those old losses.
So this is where we are now. You have these two incredibly powerful forces, the steady, fundamental business case and this wild, high-risk geopolitical gamble, just crashing right into each other. This is where the spreadsheets meet the real world.
Which, of course, brings us right back to the big question. With these two opposing stories now tangled together,
How in the world are you supposed to think about a company like ExxonMobil?
So here's the new reality. That strong, fundamental case for Exxon, it's still there. But the company's future is now tied at the hip to this incredibly high-risk, high-reward situation in Venezuela. So that nice, clean $132 valuation, well, it just got a whole lot more complicated. And that leaves us with the ultimate question, doesn't it? As Exxon tries to figure this out, is Venezuela a once-in-a-generation shot at enormous growth? Or is it a multi-billion-dollar trap just waiting to spring, paved with a very, very difficult history? Only time is going to tell.